Money FM 89.3. Best of breakfast. Companies to watch.
That's right. Welcome to Companies to Watch this Tuesday morning. I'm Emaad Akhtar, joined by Delicious Danko.
Hey, good morning, Emaad.
How are you?
Happy to see you in the hot seat for today on Companies to Watch. 88550893. Text us and tell us whether you think it's going to be
hot or not.
Today, returning local, Emaad. Staying in Singapore. When you think of the Singapore stock market, what kind of stocks comes to mind?
Singapore Airlines, DBS, UOB,
Okay.
and OCBC.
All right. What about the indexes?
What about the indexes?
Yeah, maybe the Straits Times Index. Yeah, but yes, we usually think of like the basket of the 30 blue chip giants, like what you've rightly mentioned, DBS, the local banks, Singtel, Keppel. But it seems like the Singapore Exchange has just launched something new. 2 indices that shine the spotlight on the next wave of companies beyond the STI. And guess what, Emaad? Early numbers suggest that they're already outperforming.
Brilliant.
Yeah, so we're talking about the 2 new benchmarks. They're called the iEdge Singapore Next 50 Index, as well as the iEdge Singapore Next 50 Liquidity-Weighted Next. And basically both tracks the 50 largest mainboard companies after the STI's top 30. So we're looking at some of the biggest names in Singapore, but the thing that separates them apart is one of them is weighted by free float market cap, which basically means the standard way of building an index, all right? While the other is liquidity weighted, which means that companies are traded more actively and they would get a bigger weight within that index as well.
Yeah, this is interesting because it comes off the back of the MAS launching the Equity Market Development Program back in Feb, which it is setting aside $5 billion for to fund managers to invest in Singapore equities, especially those in the small and mid-cap space. So they're casting a wider net over a range of companies beyond just the index component stocks like the ones we've just mentioned.
Certainly so. Reinvigorating some kind of hope and optimism, and of course to spur up some investor demand as well within this market. So together they give investors and fund managers a broader picture of Singapore's stock market beyond just our usual household blue chips. The constituents are grouped by sectors. There are about 10 sectors in total, ranging from the likes of industrials, financials, consumer, non-cyclicals, technology, telecommunications, all the way till REITs, right? And the max weightage per stock is pegged at 5%. So you could say it's fairly diversified. The blue chips that STI would have would not already appear in the next 50 index, but there is still some notable quality REITs inside the list, with a total of about 16 REITs featured. Quite a number of them. They make up a huge chunk of it, actually.
They do, yeah. A significant portion of the index is comprised of real estate by sector, apparently 48%.
Yeah, it's a huge weightage there. Now, the stocks with the largest weighting on the iEdge Singapore Next 50 Liquidity Weighted Index are, you would know some of these companies: ComfortDelGro, Young Financial, iFast, Keppel Reed, and of course the recently IPO'd NTT DC Reed, each weighing about 5%.
Not
so,
bad.
yeah, it seems like it's a fairly good enough deal. The new index is also peppered by S-REITs, like what you've rightly mentioned, making up almost 50% of the total index. And it could be a good, or some might also consider a bad thing. But all in all, you could roughly say that REITs in Singapore, they would perform fairly okay, even in the midst of difficult times, because a lot of people would rely on the dividend payouts that they receive.
I actually think REITs are probably doing pretty well right now, given that interest rates have come down. And so they'll increasingly do well, I think, down the line.
That's a bright spot to look at. So let's find out why exactly SGX launched them. Well, according to the firm, the goal is to broaden visibility and investor demand for mid-cap names. Institutional investors, they have already been buying more than $400 million worth of small and mid-cap shares.
Wow.
Just in the first 8 months of this year. So daily turnover in those names is almost 50%. And by creating these benchmarks, SGX is giving fund managers more tools to benchmark performance and, of course, opening the door for ETFs or perhaps structured products that might in future attract these mid-tier stocks. So, yeah, it does seem like we're trying to broaden out the options for investors out there. And if we look at how they've performed, well, the iEdge Singapore Next 50 Index has delivered an average return of 5% per year over the past 10 years. That still falls short of the STI, which returned about 8.9% per year for the past 10 years.
Though I think the STI's dividend yield is 4.48% over the past year, whereas the iEdge Singapore Next 50 Index latest 12-month dividend yield is 5.85.
Yep, so that's a good spot to look at. And after all, I mean, if you consider dividends within the performance of not just the capital or the stock price, I guess that could also be a bright spot for many to look at. Well, between 2015 and 2024, the STI still did outperform the iEdge Singapore Next 50 indices in 5 out of 10 years. But then again, you know, the numbers recently are still quite eye-catching. After all, the iEdge Singapore Next 50 indices have at times pulled ahead of the STI. Just recently, the Next 50 indices are up about 24 to 25%, beating the STI, which is just up about 17 to 20%, right? So that means, at least for now, the mid-caps are delivering stronger returns than the blue chips. So on top of that, many of the Next 50 constituents are seeing improved liquidity and trading activity, which suggests that these indices are likely to, or already helping to boost the visibility of these stocks.
Yep.
So bull case, diversification. I mean, you're looking just past beyond the 30 big names that we're so used to. There's a potential for outperformance. After all, the Next 50, they've recently shown to outpace the STI, and sometimes mid-caps can deliver stronger growth. And of course, you know, liquidity effect, the inclusion of an index often boosts investors' attention, and that could likely benefit the companies inside. But here's the bear case to consider. Mid-caps are generally more volatile than large caps. Liquidity can be thinner, which means bigger price swings. Exposure to the same macro factors. We're talking interest rates, currency swings, and of course, the regional growth. So while it offers great opportunities, I mean, at the end of the day, should you be seen as part of your balanced portfolio.
Correct.
More than just a replacement for the blue chips, right? So, I mean, having considered, you know, how this might be included or this will be included into the Singapore stock market, and to see just considering how, you know, the benchmark might also reinvigorate hope and provide some liquidity and visibility into mid-cap stocks, I guess the verdict for me for today has to be a heart.
Woo! Yes, SGX gets HOT from ME as well.
All right. Yes, go for gold, SG stocks. All right, Emaad. And that would pretty much wrap it up for analysis of today's Stock in Focus, Next 50 indices. Tell us what you think, 8855-0893. Okay. Emaad, here's some fun facts. Now, did you know that SGX is the world's most liquid international market for the benchmark equity indices of China, India, Japan, and ASEAN?
Wow.
Yeah, in fact, in foreign exchange, SGX is Asia's leading marketplace and most comprehensive service provider for global FX over-the-counter and future participants. So what do you call a giant psychic who manipulates the stock market?
I don't know. Tell me.
A tall medium who shorts. Okay.
I would have never gotten that.
Why was the stock trader electrocuted?
Because he didn't pay dividend yields.
What? Because he shorted Tesla. And that's all we have for Next 50 indices.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.